Wall Street is anticipating the markets will turn around. Companies are getting much more optimistic, and when companies make money, the stock market value of those companies goes up. This restores confidence into investing and trading, and it permeates every single market, from the stock market to crypto. A turnaround is coming, and it's largely being driven by AI. With renewed optimism, it's going to impact all markets globally. Are you ready for a turnaround? We're going to delve in deeper to the intercorrelations between markets, and what I share may come as a surprise, especially if you're a new viewer. Let's run the numbers. Earnings growth and profitability are returning to the stock market, and Wall Street forecasts project the profit recession ends next quarter. You can see over the different quarters, profitability is improving inside the main market. A turnaround is on its way. The main markets are primarily driven on earnings, and we can see across all sectors there was an increase of 0.90%. Communication services and financials did the best. Utilities and energy did the worst. Using the CTKS method, we look for structural support and resistance inside the charts. When we turn on our indicator for the S&P 500, what do we notice? The S&P 500 couldn't get above resistance at that 45.40 mark, and it came down and caught a safety net. These safety nets are gravitationally biased. It pulled it up with gravity, and we can see we're heading back to that previous high of around 45.42. If you would like this indicator, just pop across to ctksmethod.org. When the major indices improve, it's not surprising that the markets go up, and we can see across the market, apart from Apple, which is a leader in the tech sector, a consumer electronics giant, and of course one of the largest companies on the planet. We had broad-based gains in yesterday's session. What you can see here is the Nasdaq. The blue line is Bitcoin. Notice how the blue line, Bitcoin, and the Nasdaq follow each other. This is very important to understand. There's a rule inside the masterclass that explains this phenomenon. If you know it, please let me know in the comments. With the CTKS method, we draw up objective dynamic market structure across the inception of price history. What we see here, the Nasdaq has been marked up since 1973. And where is the resistance? It's up higher than the S&P 500. It's around that 14,206 level. You can see the support down at 13,858. What we also see is the similar pattern inside the S&P and the Nasdaq. Both indexes were actually coming into support. We expected a bounce. These lines are where smart money buys and sells. If we get positive pressure in buying, they won't even cut those lines. That's what we want to see. We want to see strength. For the next FOMC meeting, the federal funds rate is expected to stay the same. 86% probability of doing so, and only a 14% probability of a 25 basis point increase. This is really important to understand. If interest rates inside the economic system start increasing, it's probably because inflation is taking hold. We'll likely see a correlation with oil under those certain circumstances. Therefore, it's important to look at oil as well, and oil was released plus a video inside the CTKS Method service just 8 hours ago. 3 very positive things from this chart. The fear gauge of the main market came down. We could see junk bonds improving. That's a risk-on asset play. This is a risk-on asset play as well, with a decrease in the VIX, and the DXY actually decreased. These are the kind of things that we want to look for. When it comes to looking at the S&P 500 and then we overlay Bitcoin and total crypto market cap, you might notice a fairly strong association. What does this association mean? When the main markets sell down, Bitcoin and crypto are going in that direction. You'll notice this very big jump off from the S&P 500 futures. Bitcoin and total crypto market cap followed. What are we witnessing now? We're witnessing a turnaround, and we know the structure of the S&P 500. We know that it's got positive momentum. It bounced from structural smart money support, and it's heading up to structural smart money resistance. And we know where those things are because we have the indicator. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. The smart money buy and sell levels in oil were released inside the service, and when we mark up price action, we do so from the inception of price history. In this case, US oil started in 1861. The markup is contained within this indicator. What we can see is there's fairly strong structural smart money buy support at 82.03. And there's structural sell levels at 82.45 as well as 82.59. But this 82.45 level is stronger. If you would like this indicator as well as seeing a video that covers off what's happening inside oil as well as the price projections for the next month, just pop across to ctksmethod.org. It's very important to understand how the Tier 1 charts actually drive the entire global financial system. They are the engine. Tier 2 and Tier 3 are of course very important, but Tier 1 is what we must look at. We know the crypto and Bitcoin total crypto market cap follow the S&P 500 and the Nasdaq. From a directional correlation stance, understanding this relationship is vitally important. We're seeing signs of strength in the US economy, therefore we should see signs of strength coming through into crypto. Retail investors and traders may not understand the connections, but professionals certainly do. They're always looking at them. They analyze the Tier 1 charts. They look at interrelationships, interdependencies, and cross-correlations. Over the past 24 hours, we've seen a slight reduction in total crypto market cap. Bitcoin is currently acting as a flight to safety. The greatest gainers top 100. In the past 24 hours, Bitcoin Cash, Optimism, BSV, TWT, Stellar, Rune, Link, Algo, and IOTA. Good to see you, IOTA. The greatest losers, top 100 past 24 hours, XTC, Rocket Pool, Comp, SHIB, Casper, HBAR, Peppy, Fracshare, and Ape. With the uncertainty in global markets, we've seen fear and greed, a lot of fear entering into the crypto market. We know from Rule 45, no alt can escape Bitcoin's gravity, but can we prove that rule out? Yes, we do. Every single day, we can see Ethereum moving down with Bitcoin, and currently the flight to safety is occurring into Bitcoin relative to Ethereum. The Ethereum movement is weaker. We can also see that Binance Coin is currently weaker than Bitcoin. XRP just trying to track its gravity, associate its gravity to Bitcoin. Doge is a little bit weaker. What about ADA? ADA has a lot of holders that are currently underwater. About 32% are in the money. So ADA could have a lot of shorts in it. When those shorts start to get liquidated, ADA could just absolutely rocket. Solana has been very, very interesting. Solana is powerful, and a lot of our beloved global family members love to trade Solana. We can see that Tron is also in the top 8. We just looked at gravity. Now let's look at relativity. We can see that the flight to safety is indeed occurring in Bitcoin relative to Ethereum. Binance Coin is recovering. So far, there's a flight to safety into Bitcoin rather than XRP. That's very much the case inside Doge. Inside ADA, it's also the case, but Solana is over-accentuating the gravity of Bitcoin. Pretty interesting. Solana is strong, but Solana tends to get very, very weak, and when it gets very weak, it rebounds. Solana is a very powerful project, and we can see that Tron is also below Bitcoin's gravity. Looking into the institutional EDX exchange, which has got the loving approval of the SEC to trade Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, we saw Bitcoin Cash absolutely go nuts. Bitcoin Cash has been suppressed for many, many years, pretty much like Litecoin as well. There are a huge number of shorts in Bitcoin Cash. When they get liquidated, they spike price up. Applying the CTKS method, which is the world's most powerful smart money buy and sell level detection system, we know that we control the trade or investment, but the market controls the return. Because of inherent volatility and variability inside financial markets, we must be prepared in 3 dimensions. That's what the CTKS code does. It prepares you. You can't be caught by surprise if you've already figured out how things could move. To Jen and John, you are legends. With the CTKS code, we estimate what is the market doing now, what do we think the market will do in 24 hours time, and this really depends on what time zone we're in. One person may say down, another may say neutral, and another may say up, and in different time zones, they're all correct. You cannot compare CTKS codes through different time zones. And it also depends what you're actually trading and investing in. If you're trading in oil or commodities, as opposed to Forex and maybe stocks, maybe crypto. This is why the CTKS code is completely unique. If your code differs from another person's code, they're not right, you're not wrong. You're doing what reflects your portfolio. The concept is the market pays for synchronization. You do your code each day, and knowing that your code only applies to you, only applies to your time zone and your investment and trading focus. We don't care if it aligns with other people's codes because they're doing different things. Please let me know what you think your code is for the next 24 hours, and this is a bit of a description to help you to understand how to form the code. The CTKS method uses what's called ODMS, or Objective Dynamic Market Structure, also called CTKS structure, to determine where smart money is buying and selling. When you look at any particular project, always do your CTKS structure first. Mark up your chart with the CTKS method to give you certainty as to where smart money is buying and selling. And the beautiful thing is that you can do it yourself. You can learn the methodology and apply it to your charts anytime you wish. And I really encourage that. In the non-financial market world, we expect certainty, we expect regularity, and we expect control. People go to work and they get a paycheck. People put their money in the bank and they get regular payments. Financial markets are a complete inverse universe. Financial markets work on probabilities and not certainty. They work on rules, many of which are hidden and can only be understood and realized through lessons, that is, losses. Unfortunately, when people enter financial markets, they just think it's like the normal world. If you go to school or university, there's a right or wrong answer. Inside financial markets, intercorrelations and interdependencies are always changing because of external shocks to the economic system. In zones 1 and 2, people treat financial markets like they treat normal life, and they get very, very angry with the markets. However, there comes a point when people just understand it's not the market, it's just the synchronization. You're not in battle with other people, you're in battle with synchronization. When you can get synchronized in with the market, you will get profitable consistently. For example, previously, did you know that the S&P 500 directional correlation impacted Bitcoin and total crypto market cap, like what I showed you in that chart? A lot of people don't realize this. In zones 3 and 4, we look at rules, 3-dimensional decision making, percentages. We boost our knowledge. And many thanks to everybody who's done fantastic comments on YouTube. Our global family is just so amazing. I'm so appreciative and grateful for everybody in it. However, having that technical knowledge inside Zone 3 is not enough. We must master fear, which is Zone 4. People can have the technical knowledge, but not have the mastery of fear with courage. Therefore, Zone 3 and Zone 4 need to go together. Zone 3, you make the money, but in Zone 4, you keep it. And of course, unfortunately, Zones 1 and 2 is where you lose it. One thing to note, professional gamblers do not gamble. They run the numbers, they know the probabilities, and they stack them. Retail gamblers always pay the house. Professional gamblers, the house doesn't want them in the first place. If you're serious about learning what it takes to be a success inside financial markets, if you're serious about self-development and self-growth, because you want to be consistently profitable, then you'll need to know your foundations. You need to be able to look beyond the charts, collecting probabilities, checking world events, and understanding how everything fits together inside a big jigsaw puzzle. And then you need to find the market's focus, understanding that opportunities reset every single day, and enhancing your pattern recognition. Before you buy or sell, you must master emotional control through positive excellence. What I've just shown you is the structure of this CTKS Masterclass. And let me know Barry has very kindly offered a CTKS Partial Masterclass Scholarship. Perperatum has also offered a CTKS Partial Masterclass Scholarship. Recently, Jay finished the Masterclass. Jay has been trading in the bear market and says the amount of successful trades is just astonishing, and this is only the beginning. The Masterclass, you literally have a license to print money. Please have a look at the links in the description of this video, and that will pop you across to cryptotechnicalanalysis.org. And when you have a look at the testimonials, you'll get a kind of an idea as to what people have found in terms of the Masterclass. And there are quite a lot of comments here, so it may take you a while to get through them. In the comments section, please let me know what kind of areas you would like me to cover in future videos. And thank you very much to Frederick, a former Masterclass graduate, who explained very precisely what the Masterclass is all about. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.